Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about USDCHF. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite significant level of previous monthly support, which was turned resistance here, which is now once again acting as support. As the market is testing a quite significant support zone, we could expect a potential reversal to the upside away from this area, fueled by some institutional longing going on inside of the zone. Dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, we can notice even more precisely and identify even more precisely the structure. In fact, we can see how exactly from here, multiple rejections to the upside were created, confirming this area as quite strong weekly support. After that, the market broke below that zone and all that previous support was turned resistance here. And the market was respecting that area as resistance, creating a massive rejection to the downside. At the moment, we had a break back above the zone. So as we know in the market, previous resistance, once it gets broken to the upside, becomes support. So as we're testing this previous resistance turn support, we could expect a potential reversal to the upside and rejection to the upside away from this level. Dropping down on the daily time frame, what do we see? Now, from a daily standpoint, we have to identify how at the moment the pattern that the market seems to be creating is that of a daily M pattern. In fact, we can see a clear impulse to the upside, then the market started with this correction, tried continuing higher, however, now it failed, and it seems like it is melting to the downside. Now, if the market will actually follow through with this continuation to the downside, we will have the creation of an M pattern. And as I said many times, after the creation of an M pattern, what you would expect is for the market to create a rejection higher for the completion of the pattern at the neckline, which is the previous support turned resistance here from a daily standpoint. So if the market here will actually create this M pattern, there is a good probability at that point to see a reversal to the upside, completing the M pattern, the neckline. We can also remember that by looking at the monthly and weekly, we had identified how all this area is quite strong support from a monthly and weekly standpoint, right? We have already identified this zone. This means that essentially from a daily perspective, we would have an M pattern testing strong support on the monthly and weekly, inside of which we have high probability of seeing institutional longing, which at that point would further increase the probabilities of a potential reversal to the upside away from this zone. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is at the moment what institutions are doing, we can see how we went from having minus 3.8k net positions all the way down to minus 9.1k net positions. This shows that clearly we're getting a decrease in net positioning. So institutions are moving to the bearish side of the CHF, adding shorts. In fact, we have 1,300 shorts added with the last report. And at the moment, we almost have double the amount of shorts compared to longs, with 21,000 shorts compared to only 12,000 longs. So institutions are shorting the CHF. Now, keep in mind that all currencies on the spot are traded against the USD. So institutions shorting the CHF essentially means they're shorting CHF USD, which means that they are longing USD CHF. Now, this means that if the market will melt inside of this support area, also creating an M pattern, this is definitely an area inside of which we have good probabilities of seeing more potential institutional longing of USDCHF, which at that point would further increase the probabilities of a potential move higher. So if we will have the creation of this M pattern, how we could be approaching a potential reversal higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the CO2 data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the completion of this M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which is also linked in the description. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the CO2 data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97 one-time payment. And if you scroll lower, you will see that at the moment the time to join with the special promotion is almost over, so I really suggest to go and check it out as soon as possible. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So I really suggest to go and check it out as soon as possible. The link is also in the description, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.